I think it should be a part of a lot of people's investment portfolios, but they don't have access to the deal flow and they don't understand it, and they're and quite frankly, a lot of them don't have the time or the inclination to hands-on manage a piece of real estate.
Right.
It's nothing more time consuming than managing however many residential houses you have, because your tenants don't call you and say, "Hey, I wanted you to know that the flowers
great.
are blooming over here and the roof it rained last night. We don't have any leaks, and just wanted you to know you're awesome."
Hey everyone, and welcome back to Hustle on Purpose. We've got a great guest for you today, John Hathaway. John, how are you doing today?
Doing great. Glad to be here.
Glad to have you, man. So give us a little bit of an introduction, who you are, what you do, how you got here, as much as you want to dive into that.
Sure. I'm John Hathaway. How I got here, I followed series instructions to get out to your address, and then I followed the signs to go further to actually get to your studio.
Yeah.
I know you didn't want to know that, but so I'm Little Rock resident, been here for most of my 61 years. Moved here when I was 3 years old. My father followed a job. We were all three boys. My family has three boys, and we were born in Wichita, Kansas.
Okay.
And for two generations, my mother and my father's side, going back for a long time, where they were all from the Kansas City, Kansas area.
Okay.
And they were Rock Chalk Jayhawk 1956. So they met in high school at Wyandotte High School in Kansas City, Kansas. And then my father was with IBM, which he claims in those days stood for I've been moved, because if you wanted to advance with the company, you went to the next opportunity. And they were stuck between, they'd gone to Lexington, Kentucky, and then it was going to be Tallahassee or somewhere else. And an old fraternity buddy of his had an opportunity in Little Rock, and that's how we ended up in, some fraternity brother from KU is how we ended up in Little Rock. Had no ties to Little Rock at all. And
now here you are.
Here I am, and you couldn't blow me out of here with a big stick of dynamite. So I love Little Rock and love all that Arkansas has to offer for people that love to do things outdoors. But I'm in the commercial real estate business, which is with a company called Hathaway Group that my father founded along with another partner, a guy named Terry Moore. Don't want to leave him out. It was called Hathaway Moore and Associates, and it was founded in February 1 of 1976.
Oh, wow. Okay.
So we're 47 years more than that, into this gig. And we do all things real estate, but nothing that involves a home. I tell people we do real estate, but not houses.
Smart.
Yeah.
From the guy that's in houses. It's like, like we were talking before.
I'm leaving that to you.
Yeah, leave it to the little guys. My residential real estate, which is pretty much all that I do, I see it as kind of a means to an end of moving. There's levels to the game, right? And like commercial, there's obviously levels within commercial.
Sure.
But I'm trying to build my way up to that the commercial game.
Well, the model's the same. You got income less your expenses, and you got to account for some surprises along the way, and shrinkage and loss of rents and repairs you weren't planning on, and then you're left with a net loss or profit, and then you got to deal with debt, and which comes below that line of net operating income, and then from there you hope you have something left over after the debt that is called positive cash flow.
Right.
Otherwise, you did something wrong with your model. But it's the same in residential or in commercial.
Yeah, it's just I equate it to like a sports analogy. It's like some people are in high school in like real estate investing and like getting their feet wet, learning some basics. And I mean, you can go all the way to college, professional and onwards. I would consider myself in like, somewhere in like the early college stage of my real estate.
Well, I'm 61. I've seen a lot of people that invest in both residential and commercial real estate through my career. And some of the most successful just started because they kept the first house that they owned, or there are a lot of ways to get there, and it doesn't have to be saving up $1 million to go buy a shopping center or something. The key is to not have any downturns in the economy or too much exposure to debt take you down along the way where you burn your, burn yourself and then you get out. You got to keep pumping those profits back in and try to build something. Sounds like you're well on your way to
I'm
having
trying.
something.
Well, in my mind, it was, I want to get into real estate. What's the least risky way to do it? It was like, I can start with affordable rent houses. You know, these are houses that rent for $750 a month, you know, and there was the lowest barrier of entry. The houses are cheaper.
Right.
And there's not much external risk as far as like markets affecting whether those houses get rented or not. You know, like right now, if you've got a house that rents for $4,000 a month, you might be a little scared.
Right.
The $4,000 a month rentals are probably taking a pretty big hit. The $750 a month rentals stay booked.
Right.
You know, there are some big issues with that. You know, the HVAC on a $60,000 house costs about as much as the HVAC on a $200,000 house.
Right.
But one grosses a lot more income than the other.
As a percentage of the annual income, it's
Right.
2 years worth of rents.
Right.
Or
Yeah.
could be.
Yeah.
I was just having lunch with a guy yesterday, having coffee. He called me up to say, do you need to review your 401k? And I said, no, but my father always taught me that we're in sales and we have to respond to people that are doing their job. Like, you got to respect that somebody's picking up the phone and calling you and give them a chance. And so about the third time he emailed me, I finally said, okay, dude, I'll meet with you. But I said, we're going to flip for coffee. I'm bringing a coin and we're going to flip for coffee. And you invest in that. You take that chance, I'll take the chance. So we had an interesting conversation. I don't know that he can help us with what we're doing with our retirement plan, but he asked me, he said, hey, I'm having a really good year at this, and I'm going to have some money to invest next year if the deals that are in my pipeline close and I get my bonus commissions.
Right.
And I said, that's great. And he said, I think I want to invest in real estate and do something that's a little riskier, but maybe have some greater returns than the stock market. I said, well, I'm a true believer in that model for some portion of your diversified portfolio. Mm-hmm. I said, but he said, what should I invest in? Should I go residential? Should I go commercial? You know, do you have deals coming up? And I said, wait, tell me your living situation. He said, well, I'm renting an apartment. I said, there's your first investment. You know, you should own a piece of real estate that you can live in. Yeah, you be the tenant. You can control whether or not you're vacant or not. So that's, right. I think hopefully he'll take that advice and go out and get it. Even though we're at recent history anyway, we're at high interest rate. I mean, you can't change that when things fall off.
Well, and that's on a macro basis. Like what I tell people is like, you know, it's hard for like these real estate investment companies, the ones that I deal with and I've worked for previously, they're in a tough spot because like they need to buy 25 houses a month,
right,
to keep the machine rolling. I mean, they've got 100 employees, and like without houses coming into the pipeline, exiting the pipeline, and doing all the work in between, like their doors don't stay open. On an individual basis, you know, this guy may have a unique in on a property that like nobody else is going to have. Mm-hmm. Like the interest rates are certainly something to take into account, but I think it's just another variable in your math, right? That you're plugging in the number to get to that net profit at the end of the year, hopefully, right?
Yes.
And you want to do that math correctly. It's just another variable in there. And also, if you're in the position where you're looking to buy your first deal, you have a unique ability over some of these companies or whatever that you think you're competing against. Because you can go full guerrilla warfare. You've got nothing to lose. Right. You just need to get one home run deal. Mm-hmm. You know, you're not in a position where you've got to do 25 low margin deals. Agreed.
And you touched on something that's, you know, everybody has their push point, whether it be price or cap rate or a lot of different variables people look at when they look at investing. And I try to explain to people that's whatever your pet deal point is mm-hmm. just one deal point in the overall equation. It's one variable in the equation. So it's not all about just price. What if that seller is offering you incredible seller financing that you couldn't get at a bank? There are a lot of different variables that all balance out to be the overall deal, and that's what you have to make the decision on, not just one thing that you're hung up on. Example, just real life example right now. My wife and I have a little entity where we use that LLC to invest in some real estate or pieces and parts of real estate.
The most common question I get asked is, GT, how do I get started in real estate investing? And my go-to answer is to go talk to Robbie Cole at Benchmark Home Loans. Robbie will help you figure out the best loan option for you in your current situation and help you with long-term planning as well. He gives out free advice 7 days a week, and he would love to help you. So if you're one of the people that's been afraid to start that conversation, I encourage you to stop right now and call 501-777-9995 so that you can start your investing journey or take it to the next level. Once again, that's Robbie Cole at Benchmark Home Loans, 501-777-9995. Finding affordable quality property and casualty insurance can be a pain, but Little Rock-based JTS has the protection real estate and property owners need. From liability and property coverage to plans for loss of rent, renovation projects, and more. Just give Matt Barger a call at 501-231-1611. He even has markets for short-term rentals like Airbnb, as well as vacant, owner-financed, and rent-to-own properties. Call Matt today at 501-231-1611 or email him at matt@jtsfs.com.
And because of a client I have in Clinton, Arkansas, and the possibility of them occupying some space in this building, I'm about to close on an investment deal. And the model did not work at all based on the very low rents that are in there now for me to go and borrow the money in a traditional sense, where typically you would go and, whether it's me individually or whether I put a group together and formed a single purpose LLC to buy a piece of real estate, the normal model is 75 to 80% in debt and the balance 20 or 25% in equity, where we raise the physical cash and we put that in and build a little reserve in there in case we miss something in our due diligence, and then let the tenant. The model's beautiful because if you have tenants, they're basically paying you to pay down your debt. Right? You're covering your expense model and having something left over, hopefully a little bit to distribute to partners or to yourself at the end of a tax year, because if you, in a normal LLC, where everybody's got a K-1, that flows through to their personal income, right? So if I say, hey, your share of 10% of this deal, you had a profit of $1,500. Well, Uncle Sam wants his portion of your tax bracket of that $1,500. So we try to have a cash distribution that will at least more than cover your tax burden, so you don't have phantom income. Yeah. But that's part of the beauty of doing these things, is that it's got a lot of benefits, and I'll touch on those in a minute. But the point I was about to make about that property, I'm not using debt. I'm scrapping together cash from here or there, and then borrowing on a home equity line of credit that we have on our home, because we don't have any debt on our home. I don't like debt, and I mean I had to use it throughout most of my life.
And you're about to go get some more.
Yeah, I'm going to have more on this, but it's a calculated. Yeah, I know the model works if I have a lot of cash in the deal and a low loan to value. Right. And then when the rates drop from when I can go to my banker and it's not 8.5 anymore and it's 6 or it's 5.75 or whatever it is. Yeah. When that sweet spot comes, I will convert it back to traditional debt, continue to let those tenants pay down my principal, and take a cash out of that, which a cash out refi is not a taxable event. So at this point, they hadn't got us yet on that.
And it's awesome. Those cash out refinances.
Yeah, those are good days. We've had some good days with those in other deals that I'm in. So, but the model it still works. The benefits. There's so many good things that go on when you're investing in real estate. One thing I love about it is I have more control. I was just telling you the other day in one of our conversations that I have more control of my share of ownership in a piece of real property than I do if I go buy Nabisco. I mean, I could go buy some, whatever Nabisco makes.
Yeah.
But I can't move the needle if I buy a truckload full of it. But if I lose a tenant in the commercial real estate business, or if you lose a tenant in one of your homes,
right,
you can put extra effort into that and make a difference that day, that minute, on the outcome of that, on the success of that real estate investment.
And you can benefit the community that it's in.
Yes.
And like the people who actually live there, or the business that actually, you know, I'm certainly not all trying to like sit on my high horse and like brag that, you know, we just beautified the world or whatever, but it really is a part of it that I enjoy.
Right.
You know, on my side, it's like I can give a family a decent place to live.
Right.
And like, that's not nothing. It's important to me.
It is. And another benefit that's intangible, like you're talking about, is just the pride of ownership. You know, a lot of people want to invest in real estate because they like to drive by after church and say, check on their house or drive through a community and say, well, you know, we own 25% of that building, or we own that home. There's pride of ownership involved. And then from a math standpoint, you know, letting your tenant have a place to run their business or live their lives and pay you rent that pays down your principal owed, obviously increases your equity, because if the value stays the same, which it doesn't, it generally goes up over time,
right?
Which is another of the benefits, appreciation. And you have depreciation still in the tax that helps you. And you have in residential, if it's your own home, you have deductibility of interest, which they hadn't gotten that taken away from us yet either.
Right.
There's just so many. There are a lot of benefits in the model that those are the positives. There are some negatives.
Right.
It's a very illiquid form of investing. If I invest in Nabisco and tomorrow I don't like what it's doing, or they announce something I don't like, I can sell my shares on my phone in about 20 seconds.
Right.
I can't sell a commercial building in Clinton, Arkansas.
It takes time.
It takes time, and you might take a major hit on that.
There's a silver lining to that too, though, because a lot of people lack the discipline to ride out the tough times.
Right.
And if you could sell it instantly, you would.
We've all made that mistake in liquid assets. Yeah.
Right.
I certainly have.
Yeah.
Sold too early, or just realized if I just held, you know.
Right.
And all those things we're describing, the illiquidity of it and the risk of it, is the reason that your cash on cash return, to my way of thinking, should be higher than if you were investing with your local stockbroker,
right,
who's going to tell you over time you can get 6, 7, 8% on your money. They say that. I don't always get that over time. But anyway,
maybe
you should be able to earn
yet.
more because of that illiquidity and because of the risk associated with a single purpose asset. And
because it's a physical thing that really does decay over time and really does carry a lot of risk. Nabisco, like you said, it's not going to, as a entity, is not going to burn to the ground tomorrow.
Right.
Your building might, and that, I mean, you carry insurance and all of that. But
yes, I met this morning with an insurance agent to give them the facts on this building we're going to buy, because I don't like going to closing. You never do that without being insured.
How have your insurance conversations been going?
Getting destroyed. Getting destroyed.
Tell me about
at the
it.
Residential and the commercial
level.
But in general, it's for commercial property and casualty insurance, we're seeing year-over-year increases if they will insure your building. A lot of these carriers they're just saying, I'm out of Arkansas. And I got one where they gave me a letter that had a bunch of bogus reasons, like the wall to your dock has got a crack in it, and we're not going to insure your building. I called up my agent and said, he said, they're just covering their butts, paper in their file.
Yeah.
And he said, they won't write anything in the market, is what they should have just said in their letter. And so then we had to go shop it and find something else. But the year-over-year increases are running, if you're lucky, 20 to 25% year-over-year, but there's a lot of 35 to 40% increase. And if you think about...
Mine was 35%.
Yeah.
Was what I got quoted. I had
for your package of properties?
Yeah.
I mean, do you have a big bundle, or how do you...
Yeah, I'd have to have my insurance guy explain it to you. They each have their own individual policy, but they're also they are linked together under
They share some risk so that you get a better deal on your overall.
Yeah.
The sum of it is more cost effective for you than the whole if you just did each individual one on
but
its own.
I had to raise my deductible. It was like I was sitting in here alone on my computer trying to run some, my version of some really archaic cost benefit analysis, right? It's like, okay, well, if I double my deductible, we save, I'll save $30,000 a year. And if I save $30,000, then, if I make fewer than this many claims, it works out. And so it's just trying to crunch some numbers and make the best decision. But dude, a 35% increase on one of my largest planned expenses is brutal.
It totally destroys your model, and you can't. So you have the double whammy right now of existing ownership positions, where when you have to reset your debt from 4% to 8.5%.
Yep.
And you have insurance ballooning
and taxes.
And taxes, I try to build my models where I've got way more of an annual assumption of annual increases than the other expenses, than janitorial or grounds or anything you want to pick that would be part of the model.
Everything goes up faster than
definitely
than
real estate
do.
Taxes can once they catch up to what the actual value is and they reassess, or somebody at the assessor's office dreams up some number that you have to go fight. But but the only way to combat that, after you reset your debt, if your model doesn't work, and we've got some of those coming up where we're going to have to go to the bank and say, I know you have to have this rate, but I've got to extend my amortization term in order to get the monthly payment still could go up, but keep it in the same ballpark so that with all the other expenses in the model. Yeah. We do 10-year cash flow assumptions on every investment before we go in. It's a simple one-pager that the banks love.
Yeah.
But it's our best guess. I mean, it could get a lot better and it could get a lot worse. We try to be middle of the road on our assumptions. And to get an actual internal rate of return, you have to assume a disposition of the property. It's not that we want to sell every asset in 10 years, but because that's a very important part of this process. It's not just money out on the front end and equity and then hopefully positive cash flow periods in each of the 10 years. It's a big lump sum in the 10th year because you sold the asset that helps you get the overall return on year.
Yeah.
The internal rate of return, which accounts for the time value of money.
Right. Yeah, you put it so well. I've said it on here before because it was a valuable lesson for me. It's like, even if you have no intention of selling your business, your property, whatever investment, it's like you still have to make sure it is sellable, because if it's sellable, it's bankable, right? It's like they kind of go hand in hand. If it's sellable, it's probably because it's profitable.
Right.
And I think it's easy for a lot of business owners, investors, and stuff like that if you lose sight of that, things can get sideways on you really, really fast.
Yeah, those banks are wonderful while things are going well, but they can evaporate on you if they smell blood and water. They don't want to be the last person on the ship. One of the things we show on our 10-year cash flow analysis in a highlighted column, they want to see net operating income, make sure that that's positive. But they want to see debt service coverage ratio, which is nothing more than, I call it the oops factor on your assumptions. What percentage of that could you miss and you still can pay your debt service? So a bank wants to see at least a 1.2, meaning you got 20% of your assumption, both on the revenue and expense side, that you could miss on and still be able to pay dollar for dollar your debt service and not have to come out of pocket. So what they love it when they see that starting at 1.2 or 3, and then as rents increase and expenses stabilize and improvements you're doing to the property stabilize, that you start seeing in your model 1.4, 1.5. Then they love a debt service constant that is much less than that, much greater than that 20%. It's just a margin of error for them.
Right.
So we show that, and we show cap rate on there because a lot of investors care about their cap rate investors. But as we talked about earlier, that's not the only variable that
How do you
matters.
feel about cap rates? What's your take on cap rates?
Well, I use them because so many people identify with it and understand it. And just for your listeners and your watchers, that the cap rate is nothing more than it'd be the net operating income over the price as a percentage. So if somebody, and I'll use a real simple example to drive that home. Cap rates vary with the type of property and the security of the property. So I'll use two examples that are kind of silly, but let's say we have a net operating income of $100,000 coming in on two different properties. The first property is a Starbucks at Main and Main, backed with a 25-year lease to Starbucks corporate. It's a bond. You're clipping a coupon. Okay,
Right.
You know that thing's coming in. Well, that cap on that $100,000 might be for an investor out of California or one of the coasts that has a bunch of money he's 1031 exchanging out of.
Yeah.
He might pay a 4 cap for
Right.
that.
Yeah.
And cap rate is inversely related to value because it's just the way it works. So that $100,000, if you divide that by 0.04, you would get a price that he will pay. I don't have my calculator in my hand, but it's going to be
calculator free.
whatever that is a big number. The other property that we're looking at with $100,000 NOI is 25 units in a really rough neighborhood.
Mm-hmm.
6 of them just burned out last month, and there was a shooting and a murder there. But it's still $100,000 of net operating income. After your income and your expenses, it's still $100,000.
Yeah.
But the investor isn't going to pay a 4 cap. He might pay a 15 cap.
Right.
Simple rule of math is a 10 cap. $100,000 divided by 0.1 is going to be $1 million. So $100,000 divided by 0.4 is going to be whatever that is, $2.5 million.
2.5. Yeah.
$2.5 million. But if you divide it by 0.15, that $100,000, somebody will pay $800,000. It's the same exact net operating income stream, but there's so much more risk associated and work involved with
Right.
hands-on management to create value with the apartments that are all burned out,
Right.
than with the perfect little coupon.
Like as a somebody that is more of a novice, and they're just looking at a sheet of investment, they're on LoopNet or something, and they'll see a property and it's got a cap rate next to it or whatever. In your head, you're like, oh, this property's a 15 cap. Awesome. Like, great return on investment, right? They're just like, that's outstanding.
Big red flag popping up in my
But
mind.
big
There's
red
a
flag to somebody that has been around the block a couple
A
of
lot
times.
of times what you'll find on those when they got a teaser cap rate, you look at the asset and its class and you think, well, that should be about a 7 cap, just based on your experience of other properties you see somewhere on the market. But it's at a 9 cap. Mm-hmm. I normally assume, okay, well, the lease is about to expire and they know that tenant is not likely to renew. So
and it's got a $500,000 of repairs that haven't been done.
Yeah, there can be any number of things. Yeah.
Right. Like their cap rate's so high because they haven't been putting, because their net operating income's high,
problem
because they haven't been fixing it. I mean, there's that. I was asking your take on cap rates because my take on cap rates is it can be helpful, but to me, it's a bit of a lazy number.
It's helpful as a quick litmus test to whether or not you have an interest in the asset. But what I really care about is, after looking at all of these other factors and looking at historical expenses and being realistic about what needs to happen with the property after due diligence, what is my cash on cash? Because the reason is, if I'm going to give you $1 and get in your investment group, or if I'm going to do it myself, how many cents do I get back every year on the average? Because that better be 9 or 10 or 12 cents. That better be a 9. We talked about what the stock market can bring you with a lot less risk and a lot more diversification over and liquidity over multiple assets. So I better have, on the average, a 10% cash on cash return for this illiquid and risky set of, especially if you're just investing in one property where you don't have the diversification of multiple assets. So it's an interesting, I think it should be a part of a lot of people's investment portfolios, but they don't have access to the deal flow and they don't understand it. And they're, and quite frankly, a lot of them don't have the time or the inclination to hands-on manage a piece of real estate.
Right.
It's nothing more time consuming than managing however many residential houses you have, because your tenants don't call you and say, hey, I want you to know that, you know, the flowers
great.
are blooming over here and the roof it rained last night. We don't have any leaks and just want you to know you're awesome. I mean, that doesn't happen. Which is why we just sold our property management division.
Okay.
Not the only reason, but it's the division of headaches. We were, my father always had the theory that to be full service commercial real estate firm, you need to have the brokerage and you need to have consulting and you need to have management. And brokerage in our world means not only selling assets, but putting tenants into the property.
Yeah. Well, those commercial leases are just way different. I mean,
if
I could get triple net leases on my houses, I would be a happy man.
Yeah. Of course, every owner is pushing for more triple net, and every tenant rep, I represent a lot of tenants, is trying to off-put some of those risky, like real estate taxes. And so it's a game that's played through negotiation. And I love it when people say, oh, this is a standard lease. I just laugh out loud at them, because there is no such animal. There's no standard dog and there's no standard lease, you know.
Especially in commercial. So like it's way out of my realm of expertise. But that's why it's great talking to you. Like even just the commercial contracts, in my limited experience, I have quite a bit of experience on residential real estate contracts here in Arkansas. And I've told people before, it's interesting looking at the two between the residential and the commercial, because residential is like a multiple choice test and commercial is like a essay. It's just blank. Like it's just like, here's a sentence, and then you fill out like what you want your terms to be and how you want it done. It's really interesting.
Yeah, and it's all over the board between landlords. You'll find landlords that will, even 40, 50, 50-year runs or third generation landlords that will have the simplest of leases. Because when it all boils down, either the landlord's going to keep the roof over your head and pay the real estate taxes and do the things they're supposed to do, and the tenant's going to take care of the property and pay their rent and do the things they're supposed to do.
Yeah.
But if there's a conflict, the only thing that rules is that lease. It's the Bible on any problems. And so that's why we, in trying to be very good stewards of our clients' interest in their money, is we make sure that those leases and those contracts going in on a purchase are ironclad, well thought through. If this, then that, then what, none of this. Because remember that your landlord can sell the property the day after you start your lease. And you could go from the nicest guy in the world to the devil, who is going to milk you for everything that lease says. So that's what I try to explain to people. Oh, I know Jerry. We've known each other. We go to church. Great. Well, what if Jerry dies tomorrow and his estate is not so friendly? We need to make sure the lease is, so, but we do commercial leases that are 50 pages and we do them that are 8 pages. It depends on the landlord, the tenant, the situation, the length of lease, the credit of the tenant, a lot of things.
The property, the type of business.
That's right. But
all kinds of factors.
We sold our management division. We had about 1 million square feet under management, which sounds like a lot until you realize that our competitors had 5 million, 8 million. Colliers has 20 million.
Yeah.
And they're good friends, and we knew they'd take care of our clients and our people. And so we recently, just as of October 1, sold our property management division, something we struggled with because we've always offered that as a service, and we had valued employees that had been with us a long time, maintenance engineers, 30 years plus, and people we just could not put out on the street. And so we made sure they all had opportunities to go with that sale. And it's an experiment. We'll see if any of that synergy that comes from leasing a property, then selling a property, then management revenue, and around you go.
Right.
But what we're repositioning ourselves to do at Hathaway Group is to be, if not the best, one of the best true boutique brokerage shops in Central Arkansas.
Yeah.
As well as we have one of our brokers has moved to Northwest Arkansas and is running our office up there. So we have access to all that incredible inertia that's going on with Northwest Arkansas right now.
Yeah.
And he's doing great and writing deals and getting in the way of things. And one of my clients, I had a need in Northwest Arkansas, so I'm able to call boots on the ground up there and say, hey, come in on this deal with me, and you tour the property. You get the alternatives, the properties together for them, do the tours, deal with the landlords and their agents, because doesn't make sense for me to drive 3 hours every time somebody wants to look at a piece of property.
Right.
So that's exciting. We've got a small shop now. We went from about 20 people down to, we have 10 in our shop now, and one of those is in Northwest Arkansas.
Yeah.
And a very experienced group of brokers. And I'm the guy that does the recruiting and the training. So I'm always looking for talent that would want to get into business. And after I tell them in 3 or 4 meetings how heartbreaking the business can be, and how many ways a deal can die, and how many ways people can be unloyal to you and try to get your information for free and you don't earn a fee, if they still keep coming back around, then maybe they got a shot at doing this business. So.
Yeah. Well, in commercial, I imagine it's a lot of, what I would call whale hunting. Like in residential, it's like, a lot of those agents make their money through just a lot of smaller transactions.
Yes.
In commercial, I imagine it's a lot of, you just need a few big deals.
Yeah, and you bring up a great point. So two things involved there. One is in the residential business, it's a more homogeneous marketplace in that it's a house and it's a 3-2, or it's and it's in this area or that area. It doesn't vary that much. You might have one in some horrible shape, but the percentage of variance is not that great. In our world, it is all over the board. It could be a burned out warehouse that doesn't have a roof.
Yeah.
There could be hobos living in it. Or it might be, there's all kinds of different property types and levels of condition and specialty uses. It might be an air conditioned warehouse for food, so the prices per square foot and the ranges of value vary so greatly. But you touched on whale hunting. There are producers that do that. They just do 1 or 2 or 3 transactions a year, and that makes their living. I don't like doing that.
It's risky.
Yeah, I normally have 20 to 30 and sometimes 40 closings a year, but some of those might be a small lease where I do a renewal for an existing client that I put in a building 20 years ago, and it kept that relationship, and I might earn $1,000, or a firm might earn it before our splits.
Right.
Others would be much more sizable transactions, but at the end of the day, at the end of the year, our production year, which we happen to be on a calendar year, we weren't for the vast majority of our corporate history, but because my father started the firm February 1 of 1976,
so that was off.
We would go through January 31 was our fiscal year. Well, that just got confusing for accounting and everything else. So we went through a painful year. We tried to figure that out and made it be 12/31. So we're on a calendar year. But at the end of that year, no one cares how you got to your number. If that was 1 deal or 100 deals.
Yeah.
They care, did you get there ethically, and did you not expose us to any kind of, because in our business, if you're unethical, that just like in the securities business, that rises to the principal broker. Yep. He's at fault, which happens to be my brother, and so he's therefore very much a stickler for doing things the right way.
You have to be.
Yeah, and we've tried to build our relationship that way. Sticklers for good contracts, leases or sale contracts, and sticklers for making sure you remember who you represent and representing them well. Agency, understanding the laws about agency, because in the old days it was like, oh, he represents me because he's working on the deal. Well, no, not necessarily. And just because someone is representing one of the parties, that doesn't mean they get their fee from that party.
Right.
You just have to disclose up front who you represent, and it's very common for a owner to list his property with broker A, and broker B sells it, and broker B earns half of broker A's listing fee. Mm-hmm. So he's getting paid a fee But that fee is coming out of the proceeds at the sale from the seller. So he's getting paid by somebody he really doesn't represent. But all that just has to be clearly disclosed in your contracts.
Yeah. As early
as early as possible.
Yeah. The earlier the better.
You can't get to the closing table. Wait a minute, you didn't represent me, and I told you all this. Yeah. Then you'll end up answering to people not as nice as you.
Yeah. It's interesting with the the comps on the commercial property, because like you mentioned, it's way easier on houses because like those houses usually exist in a neighborhood of other houses.
Right. Then
usually there's some similar year build, similar size, similar condition, all of that stuff. But in the commercial world, and correct me on some of this because I'm probably wrong, but I would think typically the best way to come to the value of any given commercial property is through the income. Like so my church is here in Little Rock is really interested in buying this vacant commercial building.
Okay.
It used to be a St. Vincent clinic. You may be familiar with the building. It's right there at the corner of University and Colonel Glenn.
Yes.
That building was worth quite a bit of money. It's owned by a retirement fund out of like Florida. The building was worth quite a bit of money when St. Vincent Family Clinic was in there paying, I don't know, $30,000 a month.
Right.
Building's worth quite a bit.
Right.
Well, so now St. Vincent's been out of there for 2-3 years. It's just been sitting there vacant. Nothing good happens at vacant properties.
And this owner's still thinking that he could sell that.
The owner still thinks it's worth $5 million.
Right. Yeah. It's not. Not
it's
at that
not.
location.
It's not. Yeah.
Well, and you're describing, so in Appraisal 101, when you take that class in college, there are 3 approaches to value. And one of them is just market sales, like what are the sales comparables?
Right.
One is what would it cost to rebuild this?
Yeah.
So
replacement cost
is what that's called. And then there's the income approach.
Mm-hmm.
And you're exactly correct that in the commercial world, most practitioners hang their hat on, and most appraisers hang their hat on the income approach. But there are so many variables, such as what's the lease term left on this lease? Is there, if they're gone and you have no income, do you totally discount that and go right back to one of the other approaches? That's probably not fair. So commercial appraisers have a real challenge, and actually they either help make or kill a lot of deals because they're scared to step out on a limb and overvalue something.
It's risk to them. It's liability.
Right. So, and of course, in the old days, you call up your buddy who's the appraiser 40 years ago and say, hey, I'm going to send you the contract. They're, of course, going to see exactly what you're under contract for and know the value you're shooting for.
Mm-hmm.
The old joke is there's a high designation in commercial appraisers that's called, just like in the commercial brokerage, there's the CCIM or the SIOR, different designations that you study for and spend money and go to conventions and get those letters after your name. Well, there's one in appraisal called MAI, which stands for Member Appraisal Institute. But the old joke was it meant made as instructed. So, and appraisers don't like that joke, but you know, that really was the way it used to work. Not that way anymore. Now your bank has approved appraisers, and you work with your lender and they say, hey, we're going to give you a commitment to lend on this project based on your 10-year cash flow sheet or whatever information you gave me.
Yeah. Subject
to appraisal, and that gets ticklish because appraisals now take sometimes 3. Well, they're probably getting shorter time frames now because the deal flows down.
Right.
But you would, when it was blowing and going 2 years ago, it might be 4 or 5 weeks before you could get one. So you had to do a lot of due diligence and take some risks and spend some money making sure the building was physically doable.
Mm-hmm.
And talk to your tenants and make sure all that worked. And then when you let the appraiser go, he's going to get paid for his appraisal, whether it's at closing when you buy it or if it's out of your pocket. So that's a real live expense that an investment group would be putting out there. So you always kind of time your leap on when you actually.
Right. Yeah. Because you got to get it done to close, but you also don't want to do it if it's not
Banks
very
gotta
promising.
check that box, but you know, and if you let the appraisal go and they do a bunch of work and then you call off the deal, well, they're still going to get paid.
They're still going to get paid. Yeah.
They're still doing the appraisal.
And it's not like a residential appraiser where it's not that expensive.
Yeah.
I'm sure some of those commercial appraisals get.
Yes. Routine full appraisal is $2,000 to $3,000.
Yeah. Yeah. You can't just do that all willy nilly on every deal you think about buying.
Not chump change.
Yeah. And you're dealing with the bank who really their sole purpose is to cover their own tail, right? And the same with the appraiser. So, I mean, it's good. I think the advancements, quote unquote, in lending practices are good. What do you think?
I do, just because not watching over that is how we got into the financial crisis in the late, 07, 08, 9, 10, and had the last significant rollover in valuations that we saw in the real estate market. And that's because people really weren't, there's very little regulation and people were just,
they weren't qualified.
Yes. And now, it's kind of swung pretty far the other way, but, you still can get deals done, and there's still, banks that are lending, even though not nearly as many wanting to get into the commercial real estate game as they were, until it all settles out and we figure out what the government's infusion of all this money into the marketplace is going to do to us. Yeah,
everyone's kind of waiting for the dust to settle, or which domino is going to be the last domino, and like how's all this going to shake out. I can like feel it. It's like the rooms I'm in these days. I don't know if you're the same way. I got invited to this bank dinner and drink thing, and shockingly, because I don't really fit in, I don't think. But I guess when you owe the bank enough,
do you eat dinner and have drinks?
Well, yeah,
so
but but it's like I'm there with all the I mentioned being in like the early college part of my investing career. I feel like that's the level I'm at, and sometimes I feel like I end up in rooms with some of the pros.
Wouldn't sell yourself short.
Yeah, but
if you add up the cumulative value of all the real estate that you're invested in, it's going to be a big number. So just walk in there with that confidence.
Yeah. I mean, I'm frankly shocked that I've gotten as far as I have,
without somebody finding you out.
Yeah, like I'm just like I got like imposter syndrome or something. It's like you mentioned being an open book. I feel the same way. Like I tell people all the time, like I think if I share anything on this podcast, if people get anything from watching me and me telling my story, it's a lot of me not being the brightest crayon in the box, but you
got guts to go and try something.
You just keep doing, right? It's like I just try to keep doing the next right thing, and I'm just kind of perpetually shocked that it keeps working out. And
that's the American way. It's good.
Yeah,
there's opportunity here.
There's a ton. But at this dinner drink thing put on by a local bank, and like it was fine, but it just, you could feel like there was like just an isolated thunderstorm above this little restaurant we're in, right? It's nothing but real estate guys, bankers, insurance guys. And it's like, man, the vibe is different than it was, a year ago. But
it's not all gloom and doom. I mean, I'm in one of those rooms every Wednesday morning. This morning I was there, and
really?
It's called Top 25. It's a group of business owners that have been together for 40-something years. I've just been involved for probably 6 to 8 years as the commercial real estate rep. And there's somebody from a lot of different industries.
Cool.
We might have a lawyer, and we'd have a residential real estate guy, commercial real estate guy, construction, architecture.
Awesome.
Somebody that runs a venue, somebody that does ad specialties and promotion. So we cover a lot of ground and different areas of expertise, and so they're all exposed to all these worries.
Right.
And everybody has had a great year this year, and most of them had their best year ever last year, and they're worried about next year. There's uncertainty about that, but there's a general vibe in the room that there appears to be a good chance for the soft landing that they talk about on CNBC, and that we're not going to have a big, huge recession, and that there, once things settle out with interest rates and we figure out a direction, that there'll be hopefully be full steam ahead with good economic times without the huge recession, or don't think we're going to have a depression. But I'm bullish on business as usual in Little Rock, Arkansas. We've got a lot of, or in Central Arkansas, we've got a lot of things going for us that we've got a steady economic base because 1 in 5 people work for some division of the government, and those jobs are not just going to go away. So
we know those government jobs aren't going anywhere.
Not likely to.
Yeah.
So my wife works for the state, and that's, I love having that stability, and it helps me in my straight commission production to be married to somebody that actually has a crazy thing called a paycheck that comes every 2 weeks.
My wife was a nurse, and it was invaluable having, her having a great career and a steady one at that.
Steady income and a few things called benefits that you don't have when you're a single practitioner.
The reason she stayed as long as she did, so she was a NICU nurse at UAMS till we just kept having kids. So 3 kids, 4 and under. The reason she stayed there as long as she did is because their retirement benefits are insane.
Right.
They'll match up to 10%.
Wow.
Match. So it was like first thing she did when she got her job, and they were going over the benefits, and I was looking at it, I was like, this says they'll match 10%. She was like, oh, like, is that good? I'm like, that's insane.
Yeah.
I was like, say goodbye to 10% of your income because it's getting taken off the top and going straight to your retirement.
That's what I tell people in our 401k is like, look, I'm telling you, there's an opportunity to invest in something, and the day you invest, you're up 100%. Like, would you do that? Would you not go?
Yeah, it's free money.
You do the max for that.
It's the raise you're asking for.
Right. Yeah.
If your company will match 4%, you just got a 4% raise.
Right.
You have to live without 4% of your income, but they're matching it 100%, like you said.
Pay yourself first, and then if somebody doubles that, then what I always said is, I don't care how bad our plan administrator messes it up. If I'm up 100% on day one, it's still going to be way better.
Right.
But
yeah, even if your plan administrator loses 50%, you as the person putting your income in, you're even.
Yeah.
And losing 50% is, though I don't want to say it's the worst case scenario, but you know what the average 401k did in 2008?
I don't.
It lost 47%. And that was catastrophic.
Right.
Like,
yeah, that was the worst times. Yeah. In history. Yeah.
Terrible. Right. Mm-hmm. Granted, if you left your money in, you're doing great. But, so even in the worst time you can think of in recent history, if your employer matched what you were putting in, you still made 3% on what you put in. So anyways, you mentioned your wife. I want to talk about her, Pam.
I love talking about Pam.
Yeah.
Let's talk about her. I had to learn some things the hard way in life. So I had a few wives, not a few, two to be specific.
That's not a few.
2 wives before Pam, but she is clearly the best one I've ever had. And
third time's the charm, right?
Third time was definitely a charm for me and for her. I'm her third husband. And so we can't, neither of us can claim victory in that department.
Yeah. Yeah. Well, neither of you want to go for a fourth.
Nope.
So that's good.
Nope. We're fighting every day to not do that. But so we married in 2010, been married 13 years on July the 4th. So party.
America.
Yeah. Is always a party for us. And she has been working in the legal profession.
Okay.
She's been a lawyer for 31 years plus. And most of that time, started out, back up a little further. She's from Lone Oak, so I got a small town girl that understands, hard work and the correlation between hard work and success, and put herself through school. When she graduated high school, at Lone Oak High School, she was valedictorian, and then she and homecoming queen, captain of the cheerleading team, and all those things.
Wow.
Big fish, small town.
Yeah.
and then goes to University of Arkansas at Little Rock, UALR at the time, and I'll make sure you call it Little Rock, I think. But and that was the one place she could put herself through school. Lived at home in Lone Oak, drove back and forth, took classes, did all that. Valedictorian at UALR, so we know she's bright so far. Yeah. I don't think she's making up these stats. And then she said, what am I do for a living? And she went to the Bowen School of Law here in Little Rock, and because she had an interest there. Her mother was a 30-year public servant at Lone Oak. She was I think she was the county clerk there at the Lone Oak County Courthouse. And so she had grown up around courthouses and lawyers and kind of knew enough to be dangerous.
And real estate.
And she joins she gets through law school and then goes to work for the big firm, Friday, Eldridge & Clark, one of the biggest firms in the state. Had a great experience there, but did not like taking positions that she wasn't sure that she believed in. And you have to do that when you're in doing litigation in a firm like that.
Yeah.
And
you work for who pays you.
Yeah, and she could remember, what they thought was winning a case, but thinking this guy really didn't get justice. She loves the law because of justice, for her sense of right and wrong and equity and fairness. She's driven by fairness, and I know that because when I'm ever unfair, I'm reminded very quickly that's her. That's a button.
That's her thing.
You don't want to push, and so. She did that for 2 years. Then she resigned and ran her own firm while she was having our 2 children with her last husband. As I say, you might have to bleep this, but they're her children by previous sex. So she had 2 great kids and ran her own firm.
Wow.
And then started doing what's called clerking, which means you are the lawyer that researches and writes cases for a judge.
Gotcha.
First one she worked for was in the Supreme Court, Justice Don Corbin, and that was a great experience. She learned a lot. And then she switched over from, in the same building, the Justice Building down on the Capitol grounds, she switched over from that to the Arkansas Court of Appeals. And in the last 27 years, where she's been working as a clerk for 27 years there, she has worked for 4 different judges. The first one was 17 years and was just an incredible judge, Judge John Robbins out of Hot Springs. He's now retired, but he has endorsed her in her effort. She wants to become one of those judges. And so she's on the ballot March the 5th of 2024.
Wow.
And you'll have an opportunity to vote for her then.
Yeah.
And so he was a great mentor. And then since then, she's worked for 3 other judges, researching and writing over 1,000 opinions. And so she says, I have no on-the-job training required. I've been collaborating with these other judges and their staffs for all these years. And so this is our first kind of reluctant dive off into politics because I'm pretty much a political zero. I don't keep up with a lot of it and
Same.
never wanted to get in.
Yeah.
But the only way for her to fulfill her dream and to put a capstone on her career is to get into politics. And it's almost, there's an irony to it because the job that a judge in the Arkansas Court of Appeals does is not a very public thing other than them publishing the opinions. You don't have direct access to a bunch of attorneys or the litigants. That court reviews case rulings from the lower court of district or circuit courts.
Right.
And that can be everything from a boundary line dispute to a murder. I mean, they see it all.
Yeah.
But as you know, in our judicial system, if you and I sue each other and you think you lost, you have the right to appeal that decision of the lower court within 30 days.
Please don't sue me.
I'm not planning on it. You've been very nice so far. So that you would have the right to appeal, and it goes to one of the 12 judges in the Arkansas Court of Appeals. There are 2 of those that come from this jurisdiction that we live in, which is Pulaski, Saline, and Perry counties.
Gotcha.
One of those just got decided in the last election cycle. And so for Pam, this is her last shot. She doesn't want to be just a judge. She doesn't know how to do traffic court or to do circuit court or any of that. She would be good at that, but where she really knows is the Court of Appeals system. And it's very different. The judges don't make their own rulings. They work on a panel of 3 judges for every case. So it might be her judge's primary case.
A majority, I guess. That's why there's 3.
If the 3 can't agree, it goes to 6. But that still can be split 50-50. Right. Then it goes to 9, which you have to have a decision with 9 because it's going to be 5-4 at best, and it still goes with the 5. Right. So that's the way it works, and it's a very important part of our judicial system. A very small percentage of the cases that go under appeal. A lot of people want to appeal because if you're on death row and you're going to appeal your death sentence, right?
Right.
It gives you a little more time.
Yeah.
But it doesn't mean that the decision wasn't properly done.
Right.
But that 1 in 20 or 1 in 25 where they are able to see that somebody was hometowned or that a judge just errantly misapplied the law and the precedent set by other cases, they can either send that back to the drawing board for a fresh hearing or a fresh, whatever they call it. I'm not a lawyer. I just sleep with one. But they can send that back through the process, or they can change one piece or part of it. And so when that happens and she sees fairness and justice done, she gets giddy. That's why I know she'll make such a great judge.
I'm glad that you explained that because I didn't know most of that. And after hearing that explanation, it sounds like a vital part of our judicial system to have that
and
system
people
of
only
checks and
hear
balances.
about it if they're involved in. You don't want to hear about it because you don't want to be angry about a case or have a ruling you thought you won being appealed or so it's
never somewhere you want to be.
And those cases, even though the judges are elected jurisdictionally, 2 of them come from Central Arkansas, 2 come from Northwest Arkansas. The balance of the 8 come from districts all over. Like one district goes from Lone Oak County all the way up through 12 counties to Jonesboro.
Wow.
There's one of those judges that comes from there. They, to get a good representation across the state, come jurisdictionally, but the cases are willy-nilly, random. So somebody in Texarkana can appeal, and it could go to the judge that's in Jonesboro. So just for fairness, it goes. Yeah. And I'll call her and I'll say, hey, baby, what are you doing? And she'll say, doling out swift justice. And because she believes that by the time it gets to their court, somebody's been through a lot of hell with attorneys and legal systems they don't understand. They've maybe gotten a decision that they don't think is fair, and they deserve to have the answer as quickly as possible. So those cases, once they hit their desk, they're on and off. Now, they get queued up and they get backlogged, but once they hit her desk, she gets them on or off in 2 weeks.
That's
to the best of her ability. Unlike a lot of lawyers that just get billed by the word, they get paid by the word.
Yeah. Well, and I assume, once it gets to her desk, the case file may be boxes of stuff. I don't know, but you're past any of the information gathering. It's like, here is the information.
Yes, you raise a great point because she says jokingly, but it's true, the best way to win on appeal is to win in court. Because by the time you get to the appeal process, all of the arguments have been made, or they should have been made by your counsel. And there's nothing new you're going to be able to bring or introduce new arguments. They do a thing called oral arguments where the lawyers have a chance to come in and represent their client and have their day in court. And they all put on the robes and show up in the round thing by the Rose Garden outside the Capitol Rotunda. Right. And they do the hear ye all rise and whatever they do. I've never been to the show.
That's good.
But yeah, right. I should go just to see what she does. But she says that's a little bit, it's important because people want to have their day in court, but really that's not the place. The facts are there of the case. Yeah. It's not going to be much. I don't think they can introduce much. They can just restate their argument. Yeah. And so the way to win on appeal is to win in court. But every now and then somebody gets hometown, and that's where. Yeah. And I've said all along that there's no way anybody gets in this race that would be more experienced, uniquely qualified and experienced to do this judgeship, and it's still the case. Yeah. There will be 3 names on the ballot.
I was going to ask.
Yeah. She had, right from the start, she had another very nice young lady that works with her at the Court of Appeals. She just happens to have a lot less experience.
Yeah.
And but
can we smear the other two right here and now?
No, it wouldn't be our style at all. They're fine people, and
right.
then the way it works to get on the ballot, you can go one of two routes. You can raise a bunch of money and go pay at the Secretary of State, what amounted to almost $10,000 in filing fee.
Yeah.
And that just closed yesterday at noon. So we know there will be no other candidates entering this race. It's 4 months to go until the election, until the primary election. It's a nonpartisan race, so it's not about liberal or conservative. It's not about left or right. It's about experience. So that's the message I got to get out. So one of her opponents has worked with her on the Court of Appeals for 8 years, clerking for another judge, doing the same exact job, just 8 years versus 27 years. So you do the math. And, and 31 years as an attorney versus 10 years as an attorney. Yeah. And stage in life where your kids are 28 and 29 and you have the time and to devote to this, and young kids, there was a real difference. Well, now we drew pretty tough card, and both of them are formidable opponents because of the one I just described has social and political connections that go way back. Her mother was a circuit judge, and so she's grown up being exposed to a lot of people that are in the political realm.
Right.
I'm not, and Pam is not.
Yeah.
So, and then somebody just jumped in the race on the pay-to-play deal, whose first name happens to start with Judge, and so that's always a big deal in these races. It's not really her name, but she is a circuit judge. Was elected a year and a half ago. So then you can put that on the ballot. It'll say Judge and her name, and it'll say Pam, and it'll say Molly. So your average guy that goes to the poll, he's going to go,
already a judge.
Well, I'm voting for Judge, and here's one that's Judge. And without thinking about it, without knowing about experience, if I don't do my job of getting on podcasts,
being
and
a supportive husband,
if I don't do my job of sharing the education story, then that's a formidable opponent there.
Yeah, just the optics of it on a ballot. Like
Here's the other thing for me personally that was the worst news about that. If there are two people, I'm not a great mathematician, but March 5th would have been our last day in politics. And then March 6th, I'd either be the husband of a judge or I'd be the husband of a girl that ran for judge.
Right.
And it would be done. I'd be out. But now with three, there's a very good chance there's a runoff. Because I don't think any of those three candidates would get 51% of the vote and be done. So that means 8 more months of politics and all the money that goes along with buying that advertising and all of that. So wasn't a great week to find that out, but our story is still the same.
So you have to get 51% to win.
Yes, and if there's two candidates, then there's going to be a winner on whether it's one vote or 100,000 votes margin.
Yeah.
But now we're fighting to be one of the, I don't think any of the candidates are going to get 51% and be done, so there'll be a runoff that will happen in November. So I don't know.
You got a year.
Not looking forward to that, but we're in it to win it.
Yeah.
She just gets up every day and she looks in the mirror and says, I know I'm the right person for this job. And, and if I can get her in front of people and they see her experience level and see her sincerity about how seriously she takes this position and that it is a capstone to her career and not a stepping stone, which is important to most people.
Yeah.
I just know for a fact. She knows in her heart. And she says, hey, if we can't educate the public and they don't elect me, then I go on with some new fun phase of my life. I'll use my experience in some other way. Who knows? We're open to whatever that is. But right now it's doing all we can to get her elected. So appreciate you letting me talk about her.
I think she's incredible. I have to meet her. She sounds awesome.
You do need to meet her.
The ability, one of the many things that stuck out to me is running her own firm while having 2 young children. That a lot of women, I had a woman describe it to me once and it really stuck with me. She's like, women have to choose between being liked and respected. And it always stuck with me because
we sort of all do, but especially
women. But sometimes I did agree with her a little bit that like on that front, men may have it a little bit easier. I do feel like I can be both. Liked and respected.
Right.
But for women, especially in that stage of life, having children and stuff like that, it's like, okay, well, I either go be a stay-at-home mom and I'm liked for that, but no one respects me necessarily for like
I agree
my
with what you're saying. I do think there's been progress that, the mindset, let's just put it this way, the mindset of my grandfather, James Edward Hathaway Sr., about women and their place in the work, their role in the workplace is 100%. Yeah. I've progressed. I may not be, it'd be watered down to my father and then watered down more for me, where men now, I think, realize just how difficult and how important being a mother and the work that happens in the home, if that's what a woman chooses to do,
right?
How hard and important that is. All you have to do is teach one Sunday school class or stay home one day with just you and the kids, and you realize,
get a new respect for it.
I'd rather go swing an axe all day long.
I would.
Yeah,
I love my kids to death, and I would do anything for them. But I am not. I'm not. I need immediate results that are not possible with young children.
Right.
My wife can pour into them endlessly and relentlessly with no signs of a reward, and
so you got the end game in mind, which
passion
is
for it.
Self-sufficient kids that are compassionate.
And that always stuck with me. Women, especially in that period of life, have to choose between being liked and respected. And so to hear, there's a lot of things to love about her story. It's very impressive, but and it's probably just the stage of life that I'm in that resonated with me. Right. Being able to do both, I think, says a ton, because that's difficult. If it's okay, I'll tell you one more thing about her that I left out of her story, which is we were married 2 years and she was diagnosed with breast cancer. November the 6th of 2012. And that was election day. I came out of sales meeting on a Tuesday morning and she called and said, that biopsy I had last Friday, I have cancer. I was like, holy moly. So we spent the holidays in 2012, which has now been 11 years ago, and all of 2013 through 15 rounds of chemo and all of the ups and downs and the pain and double mastectomy and all of that. So that gives her a frame of reference on life. We teased and said, we already had a great perspective. We were thankful. We didn't need this lesson to, understand the importance of simple things. But we rely on that experience and say, hey, this election, all the stuff we got to go through to try to get elected, this ain't cancer. This is, if we can handle that and defeat that, we can sure do this and see how we come out. So she's learned a lot through that. She's given back. She was already very involved as a volunteer with Komen, Susan G. Komen Foundation, and was on the board and all of that. And then she gets diagnosed, and so that was a year that was very trying, but it also drew our entire family together. If you think about her 2 kids and she and I navigating at UAMS, where we got great care in the Rockefeller Cancer Center there, and a little plug for them. But just as you don't really understand that feeling until a doctor looks you in the face and your life is threatened in that way, or your loved one is threatened in that way. So she can handle that. She can handle the dang campaign. Yeah, it'll be easy peasy. Well, I'm so glad to hear that so cancer-free ever since. Yes. Good. Yeah, and medically speaking, with all their trials and everything, 10 years out is a big deal. So we celebrated that just this past November. So we're good. We're now 11 years out of that. It's weird. It's still weird to me, and I guess it will continue to be weird, how some of the greatest lessons, and even in a weird way, some of the things we're grateful for, come out of those like really tough, really trying times. No doubt. That's why they have Hell Week at the fraternity. There you go. Yeah, it's bonding. Yeah, I had a high school football coach that was like, his goal was to make the whole team hate him, because through hating him, we would all get bond really together. Close and bond together, right? And Yeah, and there was something I was going to say, and then I forgot what it was. But it's
never happens to me.
It doesn't, man.
No.
Yeah, that must be nice because it happens to me all the time. But neither or none of my children, for whatever reason, have been sleeping well this week, which means
you haven't.
I haven't been sleeping well this week. So
I've never had small children, so I admire you. I've had stepkids, and they normally came to me or I came to them at 10, 11, 12 years old, and so. One of my honors in life is I've never changed a diaper, and I'm hoping to get all the way through without having.
I was about to say, if you want to change that, my house is next door, and
no, there's a sign that says "Don't turn it in."
There's a pretty good chance there's a diaper in my house right now that needs to be changed. Yeah, the odds are pretty good. We could check that off your bucket list if that was something you needed to get done. But no, to go your life without doing it is
it's a good goal.
Yeah, it's a feat for sure.
I might blow it if I have grandkids, but
yeah,
don't see that happening anytime real soon. But it could change today.
You never know.
You never know.
Well, this has been great, man. So if people are interested in finding you,
yes.
Finding the Hathaway Group,
yes.
The management side is gone. You're probably sleeping a little bit better.
We are getting less calls in the middle of the night, but it's our site is hathawaygroup.com. So
okay.
www.hathawaygroup.com, and Hathaway is Hathaway. A lot of people leave out the middle A.
Yep.
I found that over time. So, and then we've had the same number at 501-663-5400 for 47 years, and
that alone is impressive. 47 years in business, in my mind, I've talked about it with other people on the podcast, is I think you can tell a lot, especially in a market like Central Arkansas. Right. I mean, a family that's been in business for that long, right. I think even without really knowing you, without really knowing any of your brothers, partners, all of
right.
That speaks volumes.
And something just to point out, people are sometimes hesitant to call a real estate brokerage firm because they don't understand how payment for the services works and all that. We're transactionally paid. So if somebody calls us about their farm they're inheriting or their investment property that they're thinking about buying or selling, we don't charge a retainer to talk to them and understand their situation. We love the chance to say, hey, we're a fit, or if we're not, here's who might be a fit. So no one should be nervous about giving a call, whether it be us or any other commercial real estate firm it's very rare that somebody would charge a retainer up front. We get paid if a transaction actually happens.
Yeah.
Unless it's truly a consulting assignment, sometimes somebody will hire us to get their ox out of a ditch on a particular piece of property or something where there's where the payday is based on hourly consulting, but that's pretty rare in our practice. It's transactionally paid.
Somebody may call you and want to just pick your brain about
and that's fine.
Commercial real estate.
No, and I love, just like you're talking to all kinds of different people in this format.
Yeah.
That's one of the things I love about my job is that it's not boring. It's not homogenous. It's
different all the time.
I'm talking to different business owners about different things they do all the time.
This podcast, you know who's benefited the most from this podcast?
You?
My wife.
Okay.
Because you know what this does is it gives me an outlet to talk about real estate and business that's not her.
Yeah.
And I think she's really appreciative of that because I'll talk about this stuff till the cows come home.
Right.
Like I really enjoy it. And she will humor me, but after a little bit, I kind of see the eyes glaze over a little bit, and she's tired. I mean, she's raising our children and all that. So I still think she's benefited the most from this podcast out of anybody. Just takes some pressure off of her.
I appreciate the chance to be on with you.
It's been awesome, dude. I love this.
Yeah.
And we're going to go duck hunting.
Oh, yeah. You're in?
Heck yeah.
You're
That's
in.
what I'm talking about. Well, awesome, man. Thank you so much for coming. It's been great talking to you. If you're out there watching, listening, be sure to vote for Pam Hathaway for
Arkansas Court of Appeals.
Arkansas Court of Appeals.
Judge.
Yeah, Judge. Judge Pam Hathaway has a great ring to it.
That's right. I want to wake up and say good morning, Your Honor, every day.
Love that. Love that. Yeah, and reach out to the Hathaway Group for any of your mainly commercial real estate needs.
Yes.
They'd be happy to help. Free advice, 7 days a week.
That's right.
Thank you so much for watching on YouTube, listening, wherever you get your podcast. Thank you so much, John, for coming. And we'll see you guys next time. And remember, hustle on purpose. Thanks for watching. If you liked that video as much as we liked making it, be sure to check out another one. You've got one here. You got another one over here. If you want to listen to the podcast audio only, go check out the Spotify link in the description. And if you haven't subscribed to the channel, please consider doing so. It helps us out a ton. And please hit the bell if you want notifications anytime we drop a new video. Hope to see you on the next one.